Hey everyone, today's video is not live, but how does that old expression go? If I don't record myself buying stocks, did the transactions actually ever really happen at all? Today I bought 5 dividend stocks, and I tried to lower my average costs on all these positions by dollar cost averaging. And for all of you who think the markets are always efficient and they're always efficiently priced, yeah, I think this last week really showed that they're anything but that. Yesterday, the unemployment numbers came in at 3 million new people lost their jobs, and that somehow caused the market to go up. Now, I don't know if people thought this was actually lower than what was being estimated, but this is just the start, and I expect more and more people to be filing for unemployment, especially as companies start to lose that cash buffer that they've been saving up for as businesses remain closed. This is a lot different than the typical rainy day fund a company might have. So that 21% gain the market has experienced in the last couple days here, that was so significant that it actually ended what was a whole 11-day bear market. But I think most long-term investors, including myself, see this as fool's gold. I think the worst is yet to come, and I certainly don't think we've hit a bottom. I actually see all the long-term economic fallouts being able to rival all the actual health issues arising from the C-19. Of course, health and safety is most important. I just personally think that the C-19 could be over in a matter of months, but the economic fallout, that could last for quite some time. And let me just go on a quick little rant here about this news article I read the other day. And, this is the usual news and doing their usual fear-mongering. But this one was just so dumb that I felt like I needed to talk about it. Yesterday, the US officially became the leader for the most confirmed cases of the C-19. And yeah, that was basically the whole point of the article. Like, what are we supposed to be getting from that? The article conveniently never seemed to mention anything about the US having the 3rd highest population in the world at what is believed to be around 330 million people. It also mentioned nothing of how much international travel happens within the US, how much of our population lives in urban areas where it's more likely to be spread. And they also conveniently didn't mention anything about the number of deaths, and the death rate here in the US is actually lower than in many other countries. I also personally don't believe that the 2 countries that have more population than us are reporting accurate numbers, and I actually think they might even be concealing them. But hey, at this point, I don't even know if the US is reporting accurate numbers. So really, who knows at this point? So of course, with all these factors, especially with the population of the US being as large as it is, that's going to cause us to have a lot more cases. Did you guys really expect a country like the Vatican with its small population to be leading the way in the number of cases? Of course not. This is just absolutely silly. This is the equivalent of me comparing my portfolio with Warren Buffett's and asking who lost more money overall unrealized in the last month. Well, of course Warren Buffett has lost more money. His portfolio is just a tad bit bigger than mine. So of course he's going to lose more overall money, again, unrealized. Now, if you ask me what was the percent change, now you might be comparing more apples to apples. I feel like news like this does nothing to help anyone. There's only 2 reasons why it was written. The first is to fearmonger, because fear sells, right? And when you can get more people to be clicking on your news articles because of fear, that's more money you get from advertisers, and that's more money that they're going to be getting in their pockets. I don't think it's ever a good idea to have people be doing nothing but panicking. The second is to push a political agenda, and when we have an election in 7 months, expect more of this so-called journalism to be coming out. Alright, so going back to my original point, and that's that the markets aren't always efficient in the short run, whether that's because of fear, emotions, optimism, or greed. I see this as an opportunity to get some gains.
Who in the media tricked you?
Alright, now that we have this long intro out of the way, let's get into the first stock that I bought today, and that was Johnson & Johnson. Now this is one I've had my eyes on for quite some time. Just waiting for the right timing here. It looks like it was down in the 111s at one point this week, but of course you can't always time the market or get the bottoms just right. And I've gotten in at some pretty good price points with J&J. My average cost is $127, which isn't too terrible. Its 200-day and 50-day moving average is around $138, so I'm getting a bit of a discount here. And now you get a starting 3% dividend yield. So Johnson & Johnson is as safe as they come. In fact, they are one of the 2 publicly traded US companies to have a AAA credit rating from Standard & Poor's, which means they actually have a higher credit rating than the US government, who, I don't need to remind you, but they can literally print money out of thin air, which we saw earlier this week. So today's trivia question is going to be, Johnson & Johnson is one of the 2 companies to have a AAA credit rating. What is the other company? And I will give you a hint. I own it, and many of you also own it. The first one to let me know in the comments will get a shout out. So Johnson & Johnson, this is not a cyclical business. As we're seeing now, people always need their healthcare, and that in turn becomes a predictable cash flow. People are always going to be needing medical devices. They're going to be needing pharmaceuticals. Right there, I just listed 3 of Johnson & Johnson's 3 operating segments. Now, there's too many Johnson & Johnson patents and products for me to list, but just face it that they're not going to go out of business anytime soon. They had nearly $20 billion in free cash flow last year, and they've had 57 years of increased dividend growth. There's a reason why so many investors trust Johnson & Johnson to continue providing value for them throughout the generations. This is a generational stock that I really think people could pass on to their kids. This is really a buy it and never worry about it kind of stock. If I had to pick between a box of gold and a box of Johnson & Johnson stock, I'm picking the J&J stock, no question. However, if it was between a box of toilet paper and Johnson & Johnson stock, I'm definitely picking the toilet paper. If you're liking this content, please make sure to hit that like button and make sure to subscribe to the channel. That's actually the best way that you can show me some support for all the hours that I put into these videos, doing all the research, doing all the editing, trying to find funny memes for you guys. And I really do appreciate it. Now let's move into the second stock, and that is AbbVie. And I bought another share of this today. Now AbbVie is another pharmaceutical company, and I've been notorious for buying it at all the wrong price points here, as you guys can see with my awful average cost and total return. Now the main reason that this stock has been hurting so much is that they're losing a lot of their patent protection, especially in Europe, for their most profitable drug Humira to other biosimilars. It still makes up a majority of their revenues. However, 2 of their cancer-fighting drugs, which I'm not even going to attempt to pronounce because they sound like Pokemon, have both been experiencing double-digit growth in sales. One of them even topped nearly $5 billion in revenue last year. Plus, their acquisition of Allegragen will become final in May, which gives them access to Botox. So expect plenty of revenue from this company moving forward, because there's always going to be some rich Hollywood celebrity telling you that their face is all natural. All right, so next up is another blue chip, and that is in Visa, which I bought another share of today. Now, Visa is a great buy, regardless of whatever the price is. Here's where I think we have such an advantage being long-term investors. So let's look at the reason why Visa is down. They have been hurt in share price because consumers are not swiping their cards as much because everything is shut down and closed. Therefore, they've had to lower their guidance and forecast for upcoming quarters. So people who manage hedge funds, they're managing money and trying to make gains for the short term. They don't really care about the long term. That's why they're selling in and out of position so much, and that's why they care about companies having to lower their guidance or forecasts. Now me, I don't care. I don't care about Visa's outlook for 2020. I don't care about it for 2021. I don't care what it is. I know that they have a great business model and consumers will one day go back to spending. Plus, ain't nobody got time to be counting cash in line. Visa gets a minuscule portion of every single transaction each time a card is swiped between a merchant and a customer. In 2018, they had over $2 trillion in processed payments. Wow, that's almost like a mini stimulus package, except Visa isn't printing money out of thin air. Also, important to note, Visa does not issue any credit, nor is it a lender. They are just a middleman, and once the C19 dilemma is over, I have no doubt that transactions will go back to increasing. So swipe that Visa card. It's almost as easy as hitting that like button, which you should definitely do if you haven't already done so. Okay, then the next stock I bought today was Waste Management. Now, I couldn't find an actual reason why the stock went down so much here in the last month, but it does seem like an analyst downgraded them from a strong buy to just a regular buy. And then, of course, they also cut their target price for them. And based on its PE ratio, it is still trading a little bit pricier. And maybe I could have waited and gotten in at a better price. But it is trading about $20 below its 50-day and 200-day moving averages of around $114. And really, I like them because they are in a sector that is just so much different than all my other sectors. In case you guys haven't noticed, my portfolio isn't all just garbage stocks. And there isn't really anything super exciting about garbage. Now, that doesn't mean that profits can't be made. And I feel like this industry will always need to be there. So I bought another 2 shares of the largest trash hauler and landfill operator in North America. And the last position I bought into was 2 shares of stores. So that's a really small buy-in today. So this is a real estate investment trust, and these have just been getting absolutely hammered here. As you can see, down 47% in the last month. And there's maybe some decent reason for them being down so much. Of their over 2,500 business properties, which they actually have a 99.5% occupancy rate of, many of them are not essential to staying open. Therefore, they don't get any customers. So no customers means no money, which means these companies are going to be having a hard time paying rent. But I feel like that's going to be a domino effect. So really, many industries are going to be hurting if tenants can't be paying rent. And that's going to hurt way more than just store. So basically at this point, I'm betting that store will be able to survive these tough times. And I'm getting in here at such a great buy-in opportunity at a price point right here. Honestly, this one is just trading at such an intriguing price. I think I might have to get a bit more greedy with them. They're trading at now starting 7% dividend yield. Definitely see a lot of growth in this company. Only has a little under $5 billion market cap. And as you guys can see here, I have been getting paid consistent dividends from them. Should hopefully go up and up as long as they don't cut that dividend. So guys, with these 5 companies I bought today, I actually will now be getting at minimum $16.42, hopefully for the rest of my life, assuming these companies don't go out of business or stop paying dividends. But that's really awesome to know that, every year I can expect at least another $16. That's 16 less dollars that I need to go out and actively work for. I can really make that money work for you. And I'm just going to continue to do this every week. So if you guys want to follow me on my journey, be sure to subscribe to the channel. Let me know what you guys are buying in the comments. And if you guys ever have any questions on anything, make sure to hit me up. I'm always available on those Instagram DMs. And let me know in the comments and we can interact.